Ladies and gentlemen, very good morning to you all. Hiregange and Associates LLP is elated to welcome you all to this webinar on how to fly through the pandemic. Speakers for today are CA Madhukar and Hiregange, CA Mahadev R, and CA Sushil Kumar. CA Madhukar and Hiregange is a senior partner at Hiregange and Associates LLP, having office in Bangalore and 13 other locations across India. He has encouraged 130 plus leading professionals in the industry to take up the ethical practice. He is an active speaker and served as the chairman of the Indirect Taxes Committee during the term 2016 to 2019. He has jointly authored 10 books in GST, which are available on leading e-commerce platform. I welcome you, sir.
Thank you, Namrata.
CA Mahadev R is a partner at Hiregange and Associates LLP and heads the audit team at Bangalore office. He is an active contributor of articles to various journals and is also a prolific speaker on GST. He has co-authored a book on GST for Bangalore University Commerce students and Practical Guide to GST Audits and Certification, and presently writing a book on GST for CA, IPCC and CMA students. I welcome you, sir.
Thank you, Namrata.
Sushil Kumar is a chartered accountant with 11 years of experience in internal audit, cost control, process re-engineering, and automation in reputed organization. He heads the Value Added Audit Division in H&A. He is also a certified forensic auditor, diploma in IFRS from ACCA UK, certified Six Sigma executive, black belt, and a postgraduate in artificial intelligence and machine learning. I welcome you, sir.
Thank you, Namrata.
Thank you, Namrata. And it's nice that on Saturday, a few of you have made time to be with us. We have been a firm which has been focusing on the indirect taxes from 1989 onwards. 88 we started this firm, and from 89 we are in indirect taxes. As we are going through this journey from central excise, then service tax, bit of VAT, then GST, foreign trade policy, these were the areas we were providing services till now. We have had a number of clients, maybe 100 or so, who have at various points of time asked us whether we can do value added audit. I would say value added audit is something like your internal audit, but specific, focused on various areas. It could be operations, it could be finance, and you'll hear a bit more about it from Sushil. What is it that we can get value in this pandemic situation when every one of us is looking at cost control? We are looking at where we can cut costs, where we can earn a bit more, where we can be efficient. In the GST, we have been known for ensuring that future disputes are reduced, or the risk is reduced of a future dispute, and also as value added professionals. We are proud to say that in most of the assignments we take up, we are normally a profit center rather than a cost center. Continuing in that tradition, we thought we'll come to this. Value added audit is the next offering which we propose to do. We have had around 6 months of working on this. Sushil has already been there in this area for a long time, working in top companies like L&T, etc. And we thought that this could be also a good value added offering. Broadly, I will present the first 2 slides. After that, Mahadev will present, and then of course, Sushil will take you through the nitty-gritties, and hopefully we will stop by around maybe 11:50, 10 minutes for question answer. Sushil, you should ensure that if the slides are not over, anyway we are sharing the slides. Can we have the next slide, please? Uh, Generally, what we have seen in this pandemic in the last 2 years has been that most businesses have been adversely impacted, and the cash flows also have got impacted severely. Not only the top line, the maybe some of us had some little less of expenses, but fixed expenses continued. But we have certainly had a problem with our cash flows. Therefore, this is a time when we are looking at how we can still thrive, or at least make the best of what is possible in these strained times. It is it is also a fact that initially we thought this will go away by May of 2020. It didn't happen. Now we have got the third wave already confirmed in many parts of the world, and I'm sure, like the second wave, we'll also get it in maybe another 3 months. It should be also having, playing havoc in India. Hopefully, the vaccinations and all will ensure that we are able to continue to work with safeguards and maybe survive through these bad times. Can we also thrive and win in these times? Is the question which we are asking. So if we look at the industries today, where we have a, what you could say, advantage, there are some. If we look at the revenue, there are certainly the technology companies have been hitting, larger and larger profits, and their top line also is increasing. Obviously, in this period when health is the focus, the insurance companies are doing well. E-commerce garments is doing very well. India, along with Bangladesh and maybe Vietnam, is also the third world. I mean, third world countries also are contributing. Certainly, that is something which is happening. E-commerce, you all know, all of us are now depending on the Flipkarts and the Amazons for most of our procurement. Pharma is doing well because of health. Shipping certainly doing reasonably well. Outsourced services doing very well. Metallurgicals recently, I think, with the with one being able to deal with this pandemic, even the other items like your cars, etc., will slowly pick up, and therefore metallurgicals have picked up. We have, of course, the negative revenue and liquidity in a large number of industries. Possibly the worst impacted have been the leisure and facilities, hotels, especially the lodging. We had such a large impact, even the what you would say, houses which were converted into leisure facilities, they also had a big hit. Real estate is still in doldrums. Looks like it will catch up. Retail, the physical retail is not doing too well. Electronics are not doing too well. And there is a challenge of certain parts from China. Auto parts and equipments are not doing that well, but I think we can see some resurgence. Airlines obviously are not doing well. And you have positive revenue, but negative liquidity in certain industries, in the sense that it does seem to be increasing, but people have don't have the money. Banks and financial institutions don't know how to lend because the cost of funds has come down, and can they take a hit on their NPAs is the issue, and of course some other industries. I thought that with this I could hand over to Mahadev, and all the best for learning, and please feel free to ask questions to Sushil towards the end. Thank you very much for this opportunity.
Thank you, sir.
Thank you, Sushil. Sushil, next slide, please. Yeah. Good morning, everybody. So I'm going to take next 5 minutes or so to discuss the possible recovery plan and how to plan ahead for future in this testing times. So one is, first we need to start with the recovery plan for this financial year, which is going to be very important. So the concept can be easily remembered by this term. So cart. So what is this cart? So first is we should have full knowledge of the processes. We should know full knowledge of the decisions which you are taking. So till now it was like, so I will take care of my division or my department or my function. So mostly I was not too much concerned about its impact on the other divisions. But with this COVID, it is very important for me to understand what is the impact it is going to be there if I take a decision or if I do a small change in the process in my division, which can be there on the other division. So having that full knowledge is going to be very important to plan the recovery for this year. Next is analyzing the situation with the data or the information. So till now, if an estimation or the assumption was being made for the subsequent year. So if I ask a salesperson, so what is going to be your sales? So generally he used to say that I believe that it is going to be around 20% increase, 30% increase, so something like that. But in this COVID situation, because of a lot of uncertainties, it is very important that the situation is analyzed with the data in hand and with a less of assumptions and presumptions. Next is going to be the re-establishing or reiterating the course of actions. It could be with respect to the processes or it could be with respect to your KPIs, KRAs. So all this is going to be very important considering the COVID situation. So next is that testing the responses. We would have taken many decisions considering the COVID situation. So in this, it is very important that we test the responses for this decisions which are taken with respect to COVID and review the results. So wherever there is a need to change the decision or make some modification, it is very important that we do that as well in order to make sure that there is a recovery plan in place for this financial year. So what is the plan ahead for future? So as on today, we are very uncertain. So last year we were thinking that this COVID is going to last for a year or so. So now we are very uncertain. So we don't know whether it is going to go away next 1 or 2 years as well. So it is very important that we plan ahead considering few important points. The first thing would be that realizing our capability and maturity level in order to build the resilience. So that is going to be very important. We have observed that there are entities with a similar challenge, similar opportunities, but few have survived and few have gone for a toss. So few could not survive at all. They have closed their businesses. So why it happened? Because few entities were able to have that capability and they had some maturity level wherein they were able to manage this COVID situation. So it is very important that now we relook at our capabilities and maturity levels. So wherever required, we make sure that there is a strengthening of the process. So wherever required, the processes can be or the system can be more of process driven rather than people driven. Then ignoring the risk is going to be very risky in future. So till now we were considering in a risk register whether it could be a risk of environment or a political situation or a demand for the product. So whatever it is. So generally we used to consider only the frequency and the impact. Now with this COVID, so it is very important for us to consider even the velocity in addition to frequency and impact in our risk register. Next is going to be the controls and the decisions. So pre-COVID, most of our decisions were like we used to make decisions and then assess the risk because we are quite hopeful on our decisions. But going forward, it is very important that our decisions are based on the risk appetite. So what is that risk which I'm going to accept in future if there is some event in and if the COVID situation is going to get worse with the third wave or fourth wave, whatever it is. Then knowledge of business is going to be very important for us to understand to plan ahead. So what do you mean by knowledge of business? So it could be to understand the business of our vendor. Is this COVID is going to have a huge impact on our vendor, which in turn can impact our supplies? Will it have impact on our customers? So if my customer is impacted, then it is very obvious that even my business is going to get impacted. So it is very important that I understand the business of the businesses also. It could be with respect to our own processes also. we need to understand our present processes also in depth to make sure that we plan ahead in future. Next slide. Yeah. So what are the primary consideration to plan ahead? So first would be to make sure that we identify the region or the business verticals which are very important or which are very relevant for a organization. Then understanding the impact. So how badly I'm hit, or what is that impact which was left on my business because of this COVID. So all this we need to understand to make sure that we plan well ahead. Then assessing the depth of disruption along with the key contributors is also going to be a very important thing. So with the new cases, with the increasing number of cases and with the new variants, we don't know what is going to happen in. Somebody needs to mute, please. Mr. Vadivel, can you please? What I was saying is with the increasing number of cases with the new variant, so we don't know. Really, we can't estimate how long this COVID is going to have impact or how long it is going to create that disruption. So already we know that there are few countries which are getting into lockdown. So recently, I think 50% of Australia is in lockdown. I think even France is considering the lockdown in future if the cases are going to increase like the present situation now. So we need to prepare for all this disruption when we are planning for this. And our recovery plan, so it should be considering all these important points which we discussed and in a phased manner so that our business sustains and it comes to shape and we are going to shine in future. So with this, I would like to hand over the presentation to Sushil, who is our Virat Kohli for this session. So over to you, Sushil.
Yeah, thank you, Mahadev. Thank you, Madhukar sir and Mahadev for setting the context so that it makes my job easier from here. Good morning, everyone. So before we get on to, Madhukar sir and Mahadev have already set the context, right? So the whole objective is that how do we play through the pandemic, and before that we need to assess where we are, and then probably our strategies can align to our current situation. So here we will discuss about key strategic levers, but before that, we will just discuss for a minute on what are the key concerns that really worried most of the businesses. So there were, I would put them into three categories. One is the reduced sales, which were contributed by the supply chain disruption and sluggish customer demand. Similarly, there is a pressure on the cash flow, which was again mainly contributed by the delayed receivables collections and increased inventory turnover. Or delayed inventory turnover. And also we had an issue in terms of making the payments right, because just because we didn't collect, we can't stop making the payment wherever it is needed. May it be a statutory payment or may it be to some MSMEs, also to our critical suppliers. And the third one, which is very critical, is like how long did we take to accept the fact that we are in the pandemic and the pandemic is going to last for a good amount of time. And how long did we take to revisit our existing policies in order to realign them to meet the current new norm? So these are the three things which really were the concerns, and these are the also the contributors to the concerns. Okay, so now with this backdrop, we'll talk about the strategic levers. So we have categorized these levers into the 6 categories. One is realigning the cost structure, which is very important, improving the productivity, readying the workforce to the new normal, sustaining the revenue stream and adding wherever possible or we get an opportunity, strengthening the capital and cash flow, and digitization. So all of this are not new, they were there even before. Okay, only the point is the focus is given to these areas are more than ever which we have given before. And when we talk about realigning cost structure, so here also there are there are few critical aspects which impact my cost structure. So one is unlike earlier, which Madhav also spoke some time ago. So we were having a budget, traditionally traditional budget. Okay, I had a plan of sale this time, and I had some percentage considering the growth, and then I plan for what would be the cost attached to that, because a cost is attached to a number which we are trying to achieve. I mean, a sales, or I mean the service, I mean, whatever it is. But here, the assumptions will not be one. There could be many scenarios which we need to work on. So when we talk about scenario, we need to have a proper scenario analysis, because the market outside is very volatile and we are very uncertain about how things would shape up. So we need to find ourselves in a position to understand where we are exactly. So we always put a band, right? There is an upper limit which we call as the best case and worst case, pessimistic one, and the momentum case, which is our current scoring rate. And then we have a most likely case, which is the realistic, which is little adjusted to the momentum case, the current case. So these are the recovery plans. Like we call like best case as a V-shaped recovery, worst case is the L-shaped recovery. But we would see like where exactly we fall. Are we closer to the best case? Are we closer to the worst case? Where is my current trajectory? And with little bit of effort, where is that I can move up to? So these scenarios also should further be analyzed in three dimensions: the depth of decline, like where we were before pandemic and where we are now, and how long this pandemic is going to continue, is that is the time of decline, and then the time to ramp up the recovery action, or the time to ramp up to go back to the desired number which you are planning for. So these two things would help us where to identify where we are and how fast or what actions we need to take so that we reach to a place where we are looking forward to. Okay, and also our budgets or strategy should be aligned to these. I mean, considering these scenarios in mind, so that we would be able to assess. Because unlike earlier, like where I had a budget for a year and I was monitoring once in a quarter or so or a monthly, but here there are certain places the frequency of revisiting the numbers is to be high, and it has to be closely monitored in the aspects of what is the impact on the revenue, what is the impact on the profit, capital, and the my valuation, the business valuation. And I mean, and accordingly, I can align my, I mean, I can have my the plan of actions listed for each scenario, and I can pick and choose like what can shoot at where, and I can have my plans like short term, mid term, and long term. So first is I need to place whatever possible scenario in front of me and all the course of action in the what if analysis. What if I'm close to this? What if I'm close to the pessimistic? Or what if I'm close to like any of the scenario? So I should have a proper the list of strategies, and then we can tweak our strategies according to the current growth. And again, when I say this scenario should not remain the same, it will keep changing. However, this would help us to get us, I mean, now put the skeleton in place so that we can tweak easily, and we did not spend a lot of time when the real event triggers, or when we really realize key where we are. We need to continuously monitor where we are, because this is very vital irrespective of whatever we do. So whenever we talk about the cash, we talk about working capital, we talk about the supply chain, we talk about the sale, but the scenario is the key to anything and everything, because this will help us to really understand where we are. Unless we know where we are, we won't be able to plan like how speed or what fast we should be going to reach where we wish to. And then the second is, one is fine, like doing a, I mean, boardroom discussion, like what is the plan. But unless we set our the office, I mean, the culture, the new culture in the sense like it is not the culture like how do we speak to employee and all of it. I mean, that is of course there, but what is the other important thing is to drive a culture of continuous improvement in the cost measures. I mean, in order to reduce the cost and the productivity improvement. So that has to be driven throughout the value chain, from the operational to tactical, and it should be driven by the top down. Also, there should be support from the bottom up. Only when they meet, the whole thing would sustain. And then also there should be a focus of this is more of a strategic thing. The whole of focus should move, the whole of resource model should move to the core functions, and whatever is non-core, probably that for that activity we can look out for some outsourcing, or we can look out for some service provider, so that whatever limited resources I have, I am able to focus to my the core. And then and we are also talking about a digital investment, so we should be I mean, encouraging people to come up with some solutions, or some, even if the smallest macro in an Excel file is a good contributor, so long as it helps me to increase my productivity. So that culture has to be driven. And also like we should look at the plans for digital investments, again a strategic call. but how do we identify where to deploy the digital investment? So for that, we need to have a proper definition of every processes that are existing in our organization or in each function, and then we need to standardize them across. And wherever possible, we should be able to modularize and group them so that when I apply a digitization or an automation for that matter, so I gain a, economy of scale. So that is important. And also like we find, this is again connected to the resource model, to the core chain. So this is again like we have companies who are sharing the space for our meetings and work. They manage to provide the good professionals to help us to deploy on a contract basis, then hiring them on a permanent employee. And also like if there are opportunities to look at moving to the piece rate based payment away from the time based payment engagements. So that is also another thing that we can look at. These are few examples, but we have many more to discover and identify. So this is about establishing a culture wherein we allow people to think differently, come up with thoughts and ideas with an objective of optimizing the cost and improving the productivity. And another thing which also impacts the cost structure is the supplier contracts. So this is one of the key, I would rather say. So the contracts I have split here into two. One is the contract for the support services, another is contract for the key services. So support services, there are few quick wins like space, like we have taken some leases, the office spaces and all of it. I have seen also a lot of companies have gone into negotiation wherein the costs have come down drastically, and also there are cases where there are no further increment in the rental. And a lot of people have even surrendered because they work from, most of people work from home, and some even have left the concept of office going and they hire that the co-workspace concept. They've gone into that. So those things are also available. So that is one way. And also the travel also has been organized, the contract with the transporters, and also have been have been either renegotiated or that have been probably terminated, and the companies have found an option to ad hoc based managing, because there are companies who even help us to organize the, even from the logistic to the meeting to the meeting room, what are the items that are needed in a meeting room. That's like a la carte sort of things are available, so we can pick and choose whatever is needed. So those sort of service provisions also we can look to avail in order to reduce the cost. And also like when we talk about the key materials or key service providers, so it is always good to be very open with them, because they are a continuous stakeholder and supporter. So we should be able to tell them like what is our current situation and where is that we are planning to move, or where is that we are planning to see ourselves. Down the line in the 3 months, 6 months, and all. So we should have a annual plan, and we should also request the suppliers to be a bit flexible in terms of our demand. And the contracts can also be renegotiated in terms of the pay term and the credit period, etc. So there are certain companies who have even gone for the aligning the payment term to the inventory turnover. So only when I sell, I would be considering my payment from there. It is not every transaction based, but it is an average based working. And some retail companies have, or consumer durable companies have gone on the scan based trading. So only when there is a sale, this is the payment happens, but no credit term, it happens immediately within a week's time. So those sort of concept people have gone in to manage the liquidity. But at this time, we see like a lot of ad hoc sourcing happening because of some supply chain disruption, or the logistic unavailability of the transportation or logistic. So, but the point is, yes, we have to deliver what is needed, but at the same time, there should be the controls across the functions. Probably we can say like a diluted control to expedite it in process, but at the same time, the control, the oversight should not be completely eliminated. There has to be continuous monitoring as to the unusual pay terms, price fluctuations, unusual billing. So there should be a dedicated team who should be looking into these sort of aspects, so that in order to fulfill certain requirements, we should not go beyond. Our cost should not overrun. That also needs to be looked at. And the supply chain risk management, this is another thing, because there are few things that are playing together now. One is the pandemic, second is the port congestions, and third is that we are talking about geopolitical risk happening like China and US. If we have seen very recent data, US is shifting all its what I say like the trade from China to some Asian countries. Okay, Association of South, I mean, South Asian nations. So those Asian countries and India, probably like if we look into like last 5 years, this has been the trend, but this COVID has fueled it really well. So India is in a country where a lot of opportunity lies when US is moving some portion of China straight to India. So we can look at that. But the same thing applies to our internal geographical risk also. Like we never know like which state would go for a lockdown, which area of the city goes for a lockdown, depending on what type of businesses we are in. So we need to have a proper command center in place, which would the whole objective of this is to build complete visibility as to what are the geographical risks. If we are only like India, I mean, we have a business in India, then probably like at each state level, at each major city, I mean, depending on where our major business lies. And if it's a country, I mean, a business which deals with a lot of countries outside India also. So then we should also be looking at what are the geopolitical risks and what are the other risks also, like credit risk of some countries, like certain countries in South America, they're not doing good at all. So in those cases, we need to revisit like whether that local bank LCs would work. So those sort of things also we need to look at, and at the same time, the supplier bases also need to be evaluated. Like what is the supplier base I have? What is the alternate sourcing mechanism the companies are having? And we should also be running the tabletop simulations to understand what if the supplier is not able to deliver on time. So what would be the impact? What is my other source of alternate source of I mean securing the materials? So those sort of analysis and simulation should be done. And another important thing is we always have been dealing with the before no purchase order, then I mean materializing it to like agreement and all. So in that case, we always looked into like the commercial evaluation, technical evaluation. I mean these are the key things. But at the same time, we need to add two other key parameters when we finalize a contract. They are like how reliable the supplier is and how scalable the supplier is. When I say scalable, how agile or flexible the supplier is to my the volatile demand needs. Because the market outside is volatile, so it is not my fault or the customer's fault, because the situation is like that. So we need to be all flexible in order to accommodate. So for that, we need to absorb and recover. So these two are the key strategies we should deal while we are talking about the risk of managing the risk in supply chain. So the other thing is also like there are few examples like we can build some in-house capabilities, or we can look for like if we can outsource certain things. It depends like depending on the type of businesses we are in, and our own industry and our own organization. So there is no generic answer to this. And also to assess the other objective of the command center is also to assess how resilient the supply chain web is. When I say the supply chain web, what are the layers that my supply chain has? So normally we focus on the supplier who supplies us, but it is also important that to understand the supplier of the supplier, because there are certain cases very recently in Nestle, I believe, the supplier of a supplier defaulted, the whole value chain stopped or the supply chain stopped. So that also is very important to look into. So the multiple layers and what are the risks attached to that supplier of the supplier, that is we otherwise call as a nexus. The nexus also needs to be looked into, how scattered or how broader those are. If it is very narrow, it is very risky. So we need to look at that way. And how do we allocate our production, and how do we manage our capacity in this? So the focus should be more on like which our product is gaining prominence in the market or gaining demand in the market. So we need to have those things in the priority basis, and under that we should have like margin and collectivity is also another parameter to look into. So which has all the tick items like demand, margin and collectibility. So probably we should focus on them. And also like how do we allocate our capacity? Again, this is based on the it's all like market driven, because it's all customer centric. And okay, now after we have discussed all of this, so because we believe that these are the few key things that has a significant impact on our cost structure. So now that we understood like the scenario, the supply chain and the contracts, the major contracts. So we now after understanding all of this, we need to have our baseline setup. So which talks about like what are the cost drivers that are the key cost driver that impacts my the cost baseline. And I and I, because I'm using some project management concept here. When I talk about baseline, the baselines are normally the cost and the time, because time also impacts the cost, so I call as a cost baseline. So the cost drivers we identify, and each cost driver, what is the impact on the cost baseline, that also needs to be identified. Once we identify, we need to fix a number to each, like what, either number or a percentage to for each cost driver and each cost the cost against the cost driver. And once we finalize, and we should also be looking at the other parameters. One is the cost, and second is the timeline as to my working capital. We call net working capital, NWCC or CCC, like cash conversion cycle. So this also needs to be looked at in terms of like what is my timeline to pay the vendor, what is the timeline to collect from the customer, and what is also the timeline to what do I say, like inventory churning. So those things also needs to be looked at, and there should also be a baseline setup. And all this happens only when we define the process very clearly and align our resources to what our baseline. So unless that clarity is there, whatever analysis or exercise we do, that would not result any value. So for that, there should be clear definition on all this. Also, there should be close monitoring on the promise and delivery. We should not either over promise or deliver much beyond, much earlier than the agreed timeline. So both way it will impact the cost structure. And this has to be closely monitored using certain tools and technologies, which tools or techniques, which we will discuss in the subsequent slides. One is power of one. Another thing also is important. Like we should not have too much of reporting. Lined up because it they may not be relevant in this current context. So we should look at only the key parameters that are reviewed on a regular basis. One is the financial number. Another from work from home concept has is evolving. Very much these days. So we should also look into the role-based access controls. Those are also very important. What sort of access are given to our each of employees. So that role-based access is also should be closely looked into. If there are any changes, that probably we can automate this also. And the also, like, we should look at like the impact of the cost across the decision and vice versa. So every time we take a decision, there should be a trade-off between the cost and the benefit. And how do we improve the productivity? So the productivity is another thing we should be looking at. One is like whatever we were considering our performance measures should not be considered in the situation. We should have a zero-based budgeting. We should all look at like what is needed in a process, what is not needed. Something which is only good to have, probably we can eliminate. We can only look at what is must have. And there should be absolute clarity in terms of the deliverable, and it should be clearly communicated so as to avoid all this miscommunication and last minute above. And also that the critical success factors needs to be identified to achieve any our current targets, and all our KPIs has to be redefined for both economically value added as well as stakeholder value addition. And also there should be a benchmarking, which is one process to my other process inside the organization and to my competitors outside also. And there should be cross training of the resources in order to manage, because in this COVID we anticipate a lot of absenteeism and attrition. So in this such cases, there are companies I've seen like where one person has left and they are not able to manage the module in SAP. So they are not following the control mechanism. All the purchase order are routed through only the mail. So the whole of control, the control gets diluted. And this was the situation because there was no cross training, no other source was available to manage this. So this has to be anticipated, and so that the cross training is also planned. And then new performance measures should be looked into, like for example my cost baseline to the total actual cost, and OD to OS ratio, like overdue to outstanding, and the reports per manager, how many reports per manager are there, what is the cost per each service function, and what is the revenue for each service function. Those also probably can be looked into. And another thing is we should look into the productive. It is not the productivity, it is also the rework. We need to look at in just increasing the number would not help. We should also be very careful as to the rework and the rectification cost also are not added parallelly. That also needs to be focused on. So these are the few things and the broader aspects we have mentioned here. So the resource deployment, cycle time, and the waste should be reduced, and the proximate to customer need and the forecast to the actual. Forecast for the sake of it will not help unless it really goes close to the actual. And delivery flexibility, we need to, how flexible are we in terms of the delivery to whatever delivery it is, whether it is the process to process delivery or to the outside delivery. And this is on a lighter note. If someone asks to measure the productivity, it is all like what is your contribution to the bank statement. So that's how it should be looked at. And reading the workforce to the new normal. So we see a lot of when we talk about cross training and all of it. So we need to understand, and also like a lot of coordinations are needed. So we need to develop a lot of spokes. And so here we need to identify people who are really skillful and or wherever there are gaps in the skill. I mean, our normal our HR, like human resources team, would have all the skill inventory of each resource, and then we what sort of skill we are trying to develop or we are looking at, and the gap can be bridged through the upskilling programs. And also there should be a productivity plans has to be drawn both together with HR as well as the process owners, because so the employees are not either overburdened or I mean, in order to balance the work, I would say this way. So it has to be done across the organization pyramid. And also like when we are working digital and remote, we need to be very careful as to how the licenses are, what sort of licenses are being used and how are they being used, what are the freewares are getting downloaded, and how is that the page for the various softwares are being deployed in the respective computers or system. That also needs to be looked into. So to manage the security and data management. So these are the few things on the workforce front. And then we are talking about the revenue stream. So first is to understand the ecosystem. Ecosystem is from end to end, like from the sourcing of material till the delivery, or the other way around. So, and what is the our industry position in the economy, and what is our position in the industry. So all of this we need to to the customer needs or repackaging the products or services, and then simplifying to the extent possible. So that is also is needed. See, if you look into the Savlon has made it small sachets of 50 paces, which are used in the aircraft, right? When we board an aircraft, we are given like 5 6 sachets. So they have simplified the product, they have aligned to the what is being needed. So I mean, this concept we never heard. We only saw like samples in that churches, but the sanitizer we never saw or never even thought of. So that has come in. So we need to be innovative in terms of this, and we'll see some more examples also in the subsequent slides. Though we also need to build some strategic partners with our probably supplier or upstream or downstream stakeholders, so that we make a complete package together, or we probably expedite the delivery to the market also. And another thing is retaining customer and expanding wherever possible. So our main question is like, are we? I mean, how is that we can assess like what we should be doing? So one is like, how is that our business is impacted? Is it negatively or positively? So, and what is that we can offer? So if we say like if we are negatively impacted, yes, can okay. So now we are shut and our physical facilities are shut. So how is that we can make our offers of the products or services online? We can look at wherever possible. Let's do it. If we do that, we should look into the. I mean, are there other infra that can be used to produce the products in demand? See, some insurance companies or the insurance have come up with COVID insurance, right? Similarly, a lot of manufacturing companies like this GM, Ford, Dyson, and all, like while their production, they are the car manufacturers or the auto manufacturers. While their the core product was on a halt, they never let the factory to be idle. With whatever sources they were having, they started manufacturing the ventilators. So they were utilizing it. And also some companies like BYD, as a Chinese company, they started manufacturing the masks with their existing facility. And wherever we even cannot do that, so we cannot go online and we cannot use our facility for alternate products or services, better we focus on the loss mitigation. In the sense, whatever we gain, we should not lose out. I mean, whatever we get like a lead, we should not lose out on that front one. And the second is, to the extent possible, we should reduce our cost. And the second change from the top is like, if our business is positively impacted, not negatively, or it's neutral. So we can look at like, how is that? Can we expand our businesses? Yes, do it, like which the e-commerce and healthcare has done it. And wherever like no, we cannot do it or we are unable to do it, so we continue the way we are continuing. And also at the same time, we should be parallel looking at what are the new opportunities that we can leverage. These are certain examples. There is a statistics, interesting number here. 5,000 out of 7,000 stores, physical stores of Nike were shut in China, because China was the major, the source when a lot of, that's the talk, right? So that was shut. But despite that, there was 35% increase in the top line, the revenue. The whole concept was like they have reinvented themselves on the online platform. Also, they have given some freebies along with, like, for example, gym. You can't go to the gym with Nike shoe now because gyms are closed. So the gym to home concept has been brought on. That sort of subscriptions were provided, and I know there are complete. I mean, there was like this. This is how the product needs to be innovated or repackaged. When we spoke about the repackaging, and some distillery companies in UK also were struggling because the pubs were all closed. So how do they do this? Now they have started doing a virtual disco, and they were sending the wine bottles to home, and they were taking the wine tours, the free wine tours, the virtual tours, and all of it. And that also helped them to sustain. And this is like same product but different way of sending them to the market, the different channels. And the same infra, how different products which we discussed, like the existing facility, how were they used for the ventilator and mask. And some of the food joints also have started selling staples. And Xiaomi, if you know about the fitness band, like I mean, they have started. This is again free complimentary services, which we otherwise have to buy separately. They started giving the early warning services on the heart rate, because a lot of people have the heart rate impacted, like at least 35% of the people. That's the statistics. So they started giving this free services because they could think little ahead and they could think differently. That's where they are able to sustain. And the same product but different infra, like Amazon and all, I started partnering with even Big Basket started partnering with some ride companies like Ola and all, and Denzo and all of it. And Alibaba also has introduced a new concept of staff leasing agreement. The McDonald's and a few other bigger food joints, when they were all going to lay off employees, Alibaba went ahead and spoke like, can we have a leasing agreement with your staff? I mean, with you, so that we can use your staff, because Alibaba was not able to manage the demand because a lot of things were online. I mean, are online. So that's why they got into this sort of agreement. So it is both win-win. And those staffs can go back to McDonald's once the situation becomes normal. So these are certain examples which we can get inspired from. And how do we strengthen our cash flow? So these are the few examples, like understanding of the cash liquidity. The scenario. Give me a minute. So it is understanding of I mean, we need to have a scenario simulation. We should, I mean, which we discussed at the beginning, because depending on each scenario, our production levels or our projected expenses, hence our cash flow requirement would also differ. So it is all attached to the simulation. So we should have our scenario simulation, and then we understand what are the minimum cash required. And also we need to establish a sound cash flow I mean the forecast system. That's where we were looking at the forecast, right? Our forecast should not be a number which was then, and our forecast should not be based on that okay, 90 days over this customer would pay. No, it doesn't work that way. It has to be relooked, and we need to assess the financial strength and fitness of the our customers also, and their customer also. That's where Madhav was talking about business of business. So that's how things are little linked, and we need to take certain actions to protect our cash flow, that we will discuss in the subsequent slide. And there should be a central control center, and this is more relevant when there are multiple views or group companies, where the fund of one, if it is idle, we can utilize for the other group companies. And building contingency plans, which always were there, it should also be there during scenario, because things would not go as planned always. So certain measures wherein we leverage on the cash flow are one is to understand our customers. So here we should segment our customers or profile customers, like in different categories, let's say like ABCD, like corporate customers, like distribution channels, or could be some like retail or small time customers and all of it. So we need to have a credit limit for each separately, each group, and also have a credit period also separate for each. It should not be product specific. It should be product and the customer profiling specific. And any waivers or any discounts or any what do I say, like going beyond this credit limit and all of it, should have a proper control mechanism in place. So that limit should also be defined, so that things are analyzed or things are given, but under, I mean, with a proper control. So that should also be like looked into. And wherever we see like a lot of times, the customer payment is stuck because of SOA issues, statement of accounts issue reconciliation. So the decision should be quicker, so that the fund is released from that the whole discussion. That should be there. And increasing invoice sequencing is another way of looking at. So that's where like the automation would help to expedite our own processes. This is one set from the customer, and the second set is from the vendor side. How best we can negotiate our the contracts with the customer, which we already discussed. And wherever possible, we should be availing the cash discount and all. Same applies to the customer. We can offer some discounts to liquidate the receivables as quick as possible, and reducing the expenses, which were like there are few low hanging which we can quickly reduce. And and it is better that you look into your financials, and indirect spends are the ones which can be quickly brought down, because direct are anyway market driven. So, and even the negotiation with the supplier is not that easy how the support services would are. And then the inventories, how should I plan the inventory and the safety level? Earlier, the safety levels were, depend on the lead time. Now we have to look into even the supply chain disruption also. We should focus on that. So we should be looking at what is the optimum safety stock that we should be having. So which considers both the new lead time, considering the supply chain disruption, so that we don't either run out of stock or nor we over hoard the stock. And wherever possible, redistribution of reserves can also be restricted, and leveraging low cost debt funds or working capital loans and receivable financing, the even privately placing NCDs wherever possible also can be looked into, as an option, and dealing wherever not so important capex, so that can also be looked into, and looking for the tax saving opportunities wherever possible, and government schemes. Even the last year the TDS rate and all got reduced, right? So that also helped us to leverage our liquidity to a good extent. And these are some examples we have given, so that can be looked at. We will share the presentation with you all. And digitization is another thing which we now realize that this is the way forward, and this is what we need to embrace, no matter what. So for that, we need to have our understanding of our existing processes, and we need to have a proper process definition. We need to simplify to the extent we call it. It is like define and decompose. Define a process and decompose to the smallest possible units, so that the similar looking units can be grouped and automation can be applied on that. So that has to be done, and we should have a proper roadmap, digital transformation roadmap, that has to be closely monitored because the resource and funding are deployed, and it has to be accelerated. It is not a decision takes 10 days or 15 days. It has to be quicker, because this is one of the channel which we are trying to leverage, and this is going to be a catalyst for us in the whole journey. So this has to be done. At the same time, we should manage on the strengthen our data management and the cyber security aspects also. These are the few. These are the certain services we can help you on. One is the setting of the baseline, customer profiling, process optimization, developing the scenarios and stress testing, partnering in the process automation and the change management, data-driven actionable insights, spend management, working capital management, MIS, etc. So we can help you in all of the services. And if we look into sometime mid of last year, there are only, like, this is a global number, 14% were prepared to with this mitigation plan, and they could quickly react. And most of them are other side, like this 44 were completely unprepared. That's where that comes in, that capability and maturity model. They were at the last. So that's where the whole thing. They were the badly hit. So the objective is to move from any of this quadrant to the first quadrant to keep ourselves prepared. And there are few things we will quickly run through. Uh, these are some two techniques we can look at. Like any decision we take, we should look at that it is not only the margin but my cash flow, how it is impacted. And we should run ourselves in this four tests, like profitability, working capital review, and stress testing, and marginal cash flow, which we will share with you. So it is like the detailed breakdown of the P&L, and look at like what is the difference between pre and post, and where is that the attention should be. And working capital, how it is going, and what there was a decline and then increase and increase. So what caused the decline, and how can we decline it further, and how can we align this would give us an insight how is that we this is a stress testing we should be putting ourselves through to understand, like if we change everything. This is what we call as power of one. If we change these 7 parameters, like price, volume, direct cost, overhead, DSO, DPO, DIO. So if we change it by one favorably, how would it impact our cash flow and the operating profit? So these are certain tests we should be running ourselves through. And every time we are trying to look for an additional sale, we should also be looking at how my working capital is going to play out. How would it block? If I sell 100, the 27 gets blocked in this current example. So what is my tolerance limit, and whether it falls within that? If it is going beyond, then we need to revisit such decisions. So establishing certain scorecards and analyzing ourselves through that. And this scenario systems book. And what next is that we do reviews prepare ourselves better. we saw like though there was a 5% decline in the top line, the EBITDA and PAT grew by 24% and 105% respectively. And this 105 was contributed mainly because of the reduction in the interest cost as well as the effective tax rate. So these are the key contributors. Okay, the new supply disruption, it is not only caused by the COVID pandemic, it is also caused by the geopolitical risks that is happening outside, and also the carbon border tax that is also the European Union is planning to propose. So which is going to be very expensive. So that carbon footprint is also a new concept that is being talked on. Though India is trying to defend on that line, but once it started, it is going to come forward. So this discussion would happen sometime in October. So which has a significant impact somewhere around, they are talking about $60 per ton of emission. So those things we need to be a bit conscious about when we are trying to do a complete structural realignment of ourselves. So this is all from our side. So thank you very much for your time and patient hearing. And we believe that we were of some, our whole discussion was of some insightful and value to you all. So now we are open to any questions if there are any, like, though these are very generic and very standard framework, we would rather say, than the industry specific addressal. But industry specific, we can all know. I mean, your concerns can be addressed like once we understand your business better and the way you work. But yet we are open to the questions if